The outlook for the Swiss franc and Japanese yen pair is pointed to the downside despite the recent gains we've seen in the Swiss franc Japanese yen. Now, the Bank of Japan is expected to exit its negative interest rate policy and start hiking interest rates around the spring of 2024. And the Swiss National Bank is expected by short-term interest rate markets to stop hiking interest rates from now on, with its inflation at 1.7%. So there's a rate divergence here, with the Swiss National Bank expecting to stop hike interest rates and the Bank of Japan expected to start them. You can see that that is reflected in the bond yield spread, which typically tracks prices. The yield spread has been trending lower between Swiss 10-year bonds and Japanese 10-year bonds. You can see the yield spread moving lower and lower. In other words, the bond markets are expecting the Swiss franc Japanese yen pair to follow suit. So this is currency trading 101. The yen should strengthen on expectations of the Bank of Japan hiking interest rates. The Swiss franc should weaken on as expectations fade for further SNB hikes. So does this mean a Swiss franc Japanese yen sell bias makes sense? Well, hold on. Just taking a look here at the Swiss franc Japanese yen pair from a seasonal bias, you can see there is a seasonal bias for yen weakness against the Swiss franc heading into year end. It's got an average return of over 2.5% and 73.91% winning trade. So it might be worth just holding off. And if you look at the start of the year, you can see that the seasonal bias is much more in favor of Swiss franc yen weakness, and there's an average return of minus 0.67%. So even though there's this big divergence in the yield spread, look, the price is still technically in an uptrend. Maybe worth just waiting for the turn of the year when the seasonal bias can also potentially help the Swiss franc Japanese yen. Major trade risks, all outlooks have risk, and this is particularly risky because it's been very hard to time the Bank of Japan's policy action. They have been stating that they will be exiting their negative interest rates, but exactly when it happens has been very difficult to time. And also, will the two central banks' divergence be maintained over the coming weeks? So that's a key risk for this outlook. Remember, don't just trade it, seize an exit.